Good afternoon, everyone. This is Jeff coming to you with Live Traders on October 18th, Wednesday. I want to kind of share with you a little bit about what's going on in the Dow Jones. Obviously, this has a lot of people, including the talking heads, a little bit perplexed in the way that the Dow was actually moving to just incredible levels in here. I will point out a couple of things. I do want to point out this volatility in here. This was more, this is when the election happened in here, right? They were just pre-election. There was a lot of campaigning. Definitely something that we've never seen before in that light. Typically, when you see a wide and whippy move here, you see kind of a move down. It kind of indicates typically a stage 3. Well, right up upon election day here, even into the wee hours of the morning, 2, 3, 4 o'clock in the morning, the Asian markets aggressively sold off over 800 points in pre-market futures prior to the open. And then once it opened here, mark settled in a little bit, and then it was just off to the races. Just an unparalleled type of response. You can see, every time, these are the monthly charts now, you're starting to see these bars, just a slight red bar, and it's embodied with a new engulfing green candle that just keeps going. And this is where shorts get killed long term. If you're playing maybe options and things like that, hedging a little bit to the short side, that's the type of money that's smart money. It's been being made here because the market is so trending and so strong here. Typically, you do not see pullbacks in the market here. You don't see them that handily. When you do, they're minor. You better be scalp-minded or very, very intricate 1-2 day swing trades at best, at least for the dominant part of the industry, which is the 30 stocks that make up the Dow Jones. As you can see here, the extension is at an all-time high from the 50-period moving average. You don't see any of this. We're going back to 09 in the debacle bottom here, around 68, 64, and 69. Well prior to that. You just haven't seen anything quite like this from a stance here. So there's a lot of guessers on there right now that are beginning to kind of guess the turn here, and that's what it is. It really is a guess. You really don't know. You would thought that this would have been the uncertainty, new form of presidency taking place, and just at least a month or two, a little bit of a kind of get up to speed pullback, and it just didn't happen. One thing I will point out here, though, interesting little note in the consolidation here as you get back into, I don't know, early mid, I guess that's mid 17 here. We'll call that, end of April, 1st of May. I will point out a concept that's widely used. This is a measured move. This breakout, if you will, is now at a height just over the 23,000 area, but it's also a measured move, meaning that the price is consolidated and then moved higher in the same distance it consolidated and went higher here. When you don't have any recourse on the upside to consider where the top may be, right? You have to kind of use other kind of notations like the measured move type approach. It's widely used. It just gives you a somewhat of a target area when you don't have a technical analysis kind of built into your structure here. And I would say right now we are pretty much moving in to a measured move area right now. If you look at the move here and then the subsequent continuation here, not only to mention moving averages on the 50 MA here. Again, prices do not like to stay away from the 50 MA. I mean, from any moving averages. This is the 50 moving average right up into here. And so we're able to kind of see where this extension is going to get sold into at some point. And when it comes down, it's going to come down in a fury. Now, it's not going to come down at once. There may be some news-related events that are bringing this thing down that may start to begin the minor exits in the market. However, once that kind of that futility continues to kind of bound south, what happens is more people begin to jump off the up wagon to the downside here of the bandwagon, and it just creates just this onslaught. It hasn't happened yet. We're not even close. And that could happen in one day, the beginning of that. But as you can see with earnings and Adobe and a lot of the different ones that were had peak earnings today at the new earnings season. Obviously, this is nothing but still strong rallies here. But I would be concerned about the 23.5 area because you're getting to the end of a major extension in here. The monthly bar from an ADR, average daily range, you're about mid-month, just past mid-month here. We've already exceeded most bars except maybe this mid-bar here. So we are outside of this volatility stage in here, which a lot of uncertainty. We're at a peak bar. This monthly bar is absolutely stretched to its capacity. And what might happen is we may continue on these initial earnings up into here, maybe even the 24,000. And what happens, that's at last the Mohicans, right? It's that wide range bar that gets sold into, particularly after a measured move with no technicals to the left. Let's take a drop down to the weekly chart and get a better view on this so we can kind of see a little bit more. As you can see, I drew a channel on this and I connected these 2 points. This was an obvious turn point. I do want to draw how the election affected the markets in here. It's a little bit more plainly seen. It's after the rally up. This is coming back in the July 1st era. Back up just through resistance, consolidated for a week upon end, and then we move back into, at that point, an extension trend line. And again, the uncertainty really peaked right in here because this is November 4th, if I got this correct, of 2016. And you can see immediately gapped up in the morning. Remember, Asian markets over 800 points down, gapped in there, a bullish gap into this about 50% into the previous day's negative sell-off into the election day. And then from that day forward, it's been nothing but net. You can see that the trend line in here, outside of this break and the uncertainty, which was expected, look at the trend line. Look how it's just staying in the upper area of that trend line and just green, 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 slight red, green, green, slight red, all the way through. And then these top areas, which we're approaching now, is going to be another area right around the 23.4, 23.5 area. If it happens inside of this week, we'll actually top out at the top of the channel once more. And again, you know, you would think that the smart money is selling that, but in reality, smart money waits for confirmation to sell that. So we're really, it's just, you have to kind of just stay with strength until strength is no longer. At that point, then you can begin to kind of speculate on some maybe smaller time frame turnabouts on individual stocks to be able to take advantage of maybe a peak turnaround here, particularly if you're playing more quarterly 6-month leaps in the options and things like that. So be aware. Keep in mind your RSI on the weekly here is at 79. That's definitely above the base of 70 here. If you look back at the other peaks in here, they went around 80. You can see we're peaking out on RSI. This is a great indicator, particularly on the daily chart. But if you look at this indicator, they have peaks. Even though these peaks will look different than your stock chart, you also want to pay attention to people that do use this as relevant information on the high. So we're actually approaching the high of the RSI on the weekly chart. Let's drill down once more to the daily chart, and I'll begin to kind of make some more sense on a short-term basis of this. Let me tighten it up a little bit. Once again, here's kind of a more recent channel after the gap up in here, and this is just earlier last month. And you can see that we just, in a smaller individual channel, just the strength is just monumental. Here I do have the 5-day moving average staying well above the 21-day moving average on the daily chart. Look at the RSI up here. Unprecedented. I mean, 87. What's the exact number on this? You're looking at 85, I guess. RSI. This has not been this high. I could scroll back into here, and you're getting way back into here. Look at the peaks back in March. Look at the peaks back in December. This is coming off the new year with the elections and whatnot. So you have to pay attention to these RSI numbers. We are absolutely hitting a top in everywhere in here. And of course, that's been said before, even in here. That's been said even in here, right, as this gap up continuation. But we have not seen RSI breach this 85, 87 area here with the likes of what we're seeing coming in earnings. If these earnings do not disappoint, we may have that wider range bar into, could be even the Christmas rally into this, and then at that point, who knows what the first of the year. So my thoughts, at least in the short term, is that you have to go with strength. We're going to have to stay with the strong side of the charts here. We're going to have to stay with this strength area. Just let it continue to move higher. We have to be thinking about Christmas. We got to be thinking about, as we get into the early stages of earnings, we're going to start in the next couple of weeks hitting some pretty monumental earnings. This is going to be the telltale sign that's going to continuation at the top. If we do stay positive in here, then once we kind of get through the Christmas holidays in here, I'm going to have to think to take a step back and take a look at the beginning of next year. This could be that huge move up into the final year, and then you may have a little bit of the tax selling, and then but just enough to really kind of breach this up into the 23.5, maybe even 24,000 area until we determine that it's going to pull back. We have to stay with positive on this. So we'll continue to kind of keep the forecast. I'll kind of update you every couple of weeks as we move forward in here as we're doing these charts, so we can give a better idea on what these pictures are becoming to be. So anyway, right now, in summary, be very cautious. You have to stay with strength. Stay a little bit more, adjust your stops and so forth when you're doing these swing trades. In the 2 to 5 day swing trades, position trades, I don't think I would be there right now. Just too much going on strength-wise in here. I wouldn't think that a position trade, if you're thinking about a 6-month, 12-month type position trade, maybe even a quarterly position trade with the first of the year coming, I would kind of just do that case by case. Maybe have a position trade, find your marks, get that stop up, protection mode here, and then let it go, and then see what happens. But beyond that here, I cannot see this market's going to continue to extend at these levels now. And again, every day we're proved wrong in this, but the technicals do not lie. When you start backing up and start looking at this weekly chart, just as a visual here, re-click on that. Hold on one second. Let me take this off here. I should be able to get this clicked on here. Here we go. Going back to that weekly chart one more time. Here we are. Again, I cannot validate that this continuation chart cannot happen. Just like in 2009 and late and 8, it's always darkest before the dawn. Well, it's the sun's always shining. People that are making money with basically little to no experience out there are throwing good money after good money, and at some point, that whole thing, they're going to be thinking like, why have this been all my life? Why have I been doing this? Okay, those days are coming to an end, at least in the short term. Now, that could be in a form of a consolidation for months, but we are not going to continue up this far, this much for, the 30,000 to 50. There's going to be some level, and I don't know what that level is. I'm just using technical analysis to help guide us and steer us, that I would not be long-term 6-month position. I wouldn't be leap longs in the options. I would not be shorting necessarily, except for the scalp side. I would be day trading to the upside, taking your 5-6 R's to 1 and moving on. If you want to stay in a position, take majority off, put your stop up, protect the downside here, and then maybe that back part will go. But definitely stay in protection mode here, because it's going to come suddenly, and it's going to happen abruptly. So when we start to see this channel begin to kind of take its shape and that real turn in the market happens, beware, because they just don't bounce back. You may get the initial bounce back to test resistance. In other words, you may have an area where you actually you kind of with the drawing on this, you may have an area where it actually begins to test in these areas. Then you think the sky is falling, all the while moves right back up and tests the top, and then you have the downfall. That's usually what happens. We call that the last of the Mohicans, right? It typically happens after a trend break, and then once you get down here and the sky is falling, and they look back and realize that they're buying it back up, and that's just a short-term people nibbling the bottom off of an overbought scenario here. And people covering from the initial shorts creates a reactionary move back up to the peak and back out. But I would definitely wait for this to get out of trend in here. I think this is still a very valid trend line. We broke through here, but that was understandable in the election. And we're just staying to the high side. So we really have no shorts in sight just yet. just be cautious, be aware of the long side as we continue to make that move higher. So anyway, I'm going to leave you with that. Until next time, this is Jeff coming to you from Live Traders on a 2-week update on the Dow and the weekly, monthly, daily charts and what we are likely to expect moving forward. Thanks, guys. We will talk to you next time. Have a great evening. Bye-bye.